defining the future of this space, whether that be things related to COVID, AI, mobile, Amazon, future of Facebook shops and social selling, etc. We have 4 amazing panelists that will be joining us today. I'm going to ask each of them just to give a quick 30-second intro of themselves. Before I do, I just wanted to introduce myself as well. My name is Tom Humphrey. I'm a partner with Access Ventures based here in Denver. I have on the call with me as well, Luis Villarreal and Elise Kent, who both work with me. And Luis will be fielding questions throughout from the audience throughout this call today. So if you do have any questions along the way, please ensure to fire them away in the chat feature. Luis will be picking up on those questions, and at the very end of the call today, we'll be carving out 10 to 15 minutes to field all of those questions that you might have for the panelists, and Luis will be asking those questions. Elise will just be a backup in case things go wrong, my internet falls down, or I start getting scratchy, and so Elise will be taking over with Luis. And so with that, I would like to just take an opportunity to cut down the presentation and introduce our panelists. Maybe just in order of Brady Bunch squares. I'll start with you, John, Jonathan, Lee, and Kristin. If you could all take an opportunity just to 30-second introduce yourself.
Wonderful, thanks, Tom. So I'm John Czaja. My background's in e-commerce. I've been in this space for close to 2 decades now. Started my career at large companies, so started at Walmart.com, also spent time at eBay and Facebook, and then also spent time at smaller companies, was COO of Bonobos, which is a men's apparel retailer. Had the pleasure of being part of the Stitch Fix journey when we went from small to big through IPO, which was amazing, as their VP of operations. And then most recently was COO of a healthcare company called Nurex, which was an interesting blend of telehealth combined with e-commerce. We essentially prescribed and delivered birth control through an app. So it's kind of a healthcare twist on e-commerce. And so have seen big companies, small companies, have seen e-commerce in various industries. And so I'm excited to be here and share my experience with you all. I think, quick personal note, I'm new to Denver, been here for 2 months, and I could not be more thrilled. I found this community to be incredibly welcoming. So thank you and the panelists as well for kind of giving me a big hug on my way into Denver, but it's been great, so thank you.
Jonathan?
Oh, sorry, I think my squares are a bit different situated than yours. I'm Jonathan Smalley. I'm the founder and CEO at Jaguara. My background's in product. I actually started my career doing predictive analytics and decision support tools inside of hospital systems, and then started my first company right out of school and got really excited about what kind of 2 major theses around the future of work and the future of commerce through working with an awful lot of the kind of first wave of digitally native brands. And Jaguar is a fully connected platform focused on commerce that allows companies to bring all of their data into one place, add business context, and receive forward-looking insights and recommendations so that teams can make better decisions faster. So we're obviously on the vendor side of things of commerce, but work with hundreds of merchants of all different shapes and sizes. So really excited to chat today.
Is that me?
Yeah, that's you. Sorry.
My squares are also a little differently situated. I'm Lee Mayer. I am the CEO and a co-founder of a company called Havenly. Havenly is a personalized e-commerce platform, by which I mean we effectively suggest what to buy, and we specifically focus on the home space. So the way it works is you work with one of our designers. That designer then recommends a whole suite of products for you, and hopefully you buy everything from us all in one place online. It's not dissimilar to a place that John works in the past, which is Stitch Fix. It is in the home space, so it has a slightly different spin to it. Prior to this, actually, I worked at a number of companies, none of which were in the home or e-commerce space, really. I was at a private equity-backed company that went public just prior to this, and then prior to that, I was at Bain, which is has nothing to do with e-commerce at all. So, this is kind of, besides being sort of what I call an ultimate consumer and a lover of consumer brands and products, this is my first foray into the e-commerce world, but it's been a fascinating ride over the last few years.
Great. Can you guys hear me? Hi. Okay, I'm Kristin. I'm CEO and co-founder of Goodbye Gear. We are a managed marketplace for secondhand baby and kid gear. So the way that it works is people sign up to sell with us. We have a location in Denver and Dallas. And we go and we pick up your used baby and kid gear and we bring it to our warehouses and we resell it. We ship nationwide, and similar to Lee, I did not have a background in e-commerce whatsoever. I have been in product management my whole career, was at startups before this. Actually specialized in mobile identity and authentication, so really different than e-commerce, but I think that this is a really exciting time to be in this world as it's really changing quickly, and we've definitely learned a lot and come at it from I think we'll talk about some of the unique challenges that that we've had to overcome and figure out a way through with both the outgoing and the returns of e-commerce.
Awesome. Well, thank you so much for those introductions. Just a reminder to everyone in the audience to post your questions as we go along. I think that there's a Q&A box right down here on your screen, which should be where you post your questions. Michael, correct me if I'm wrong on anything I just said. So just to kind of get cracking, why don't we start with Lee? Lee, your company has obviously experienced some tremendous growth in recent years, obviously looking from the outside in, and you're definitely one of the stalwarts of the emerging e-commerce scene here in Denver. You've raised $58 million in total, $32 million last October. So congratulations on that. And I think I'm correct in thinking that you have around 275 employees on LinkedIn now. I'm curious, just to ask a question. Obviously you started out, at $0 and now you're here. Like, how have you handled the scaling of the business, and what have been some of the biggest challenges you've found along that journey to date?
Yeah, thanks. That's a good question. The one thing I will say is fundraising is sort of a funny way to categorize businesses, because the only thing you should take from someone raising a relatively large round of capital is that they're probably still unprofitable. So I'm still losing money. You heard it from me first. Listen, it's been an adventure of a lifetime. I think I was just reflecting on this with Elise, who I knew when I first started Havenly, actually probably even before we fully launched. Ultimately for us, it's been an evolution of going from sort of two people in a room together trying to figure it out to a company that seems to have some legs, which is good because we're pretty excited about it. I think from my perspective, a couple of key lessons learned. So first, interesting time for e-commerce, in particular for those of you guys that don't follow e-commerce in the home segment. Tom put up a chart that reflected Wayfair's stock price growth. And actually, by the way, also from an earnings perspective, I believe this is their first EBITDA positive quarter in a very long time. And we have, and the home space is really interesting in the sense that online penetration for the home space is actually even lower than categories like apparel or consumer electronics. And in fact, even before COVID, a lot of the growth in this category and sector was intended to be in e-commerce. And so seeing that sort of accelerate has been really, really fascinating. What's been really fascinating for me is, as recently as last year, I went out and I talked to a lot of the CEOs of sort of legacy home companies, and almost all of them, to a man, and they mostly are men, reflected that they weren't sure if e-commerce was going to be a thing in this category. It's 2019, like the internet's not going away. It's probably a thing. Like, I mean, I don't know much, but like, it felt like a really interesting perspective, but in a category in which brick and mortar has really been the channel of preference for both retailers and sometimes customers, because there's like a look and feel to furniture. People feel like they need to sit in it. What's been really interesting over the last 6 months is just seeing how comfortable people have gotten with consuming this online, consuming a category that historically has not been consumed tremendously online, to consuming it online. And we've actually, Wayfair is the obvious beneficiary, but us too, or anyone in the home space, I think you've seen, has a tremendous amount of growth. So big learning from us. Exogenous factors do a lot to catapult your business into other areas. I think second learning is, starting something online, particularly a direct-to-consumer business online, you're often at the whim of sort of changing trends that sometimes it's hard to get your arms around. And so for me, it's been a lot of like trying to read the tea leaves around what's going on in the broader market and be opportunistic about bringing it back to making sure our business is taking advantage of them. But we're still unprofitable. I'm a CFO on this call, so she would kill me if I didn't.
So as someone who works at a venture capital fund, not saying venture capital equals success is great to hear.
You're welcome.
And just a reminder to all panelists that feel free to jump in on any of these questions I ask as we kind of go through. I'll direct this one actually at John, actually, just to kind of pivot off, what Lee was saying. Lee's obviously kind of gone through that journey of starting things up to getting to where she is today. And you yourself, you worked at Walmart, so the big company. You worked at mid-sized companies like Stitch Fix, and you saw it through that IPO process, which is fascinating. And you've also worked on the startup side with Bonobos and other companies. So I'm curious, what critical ways have you seen companies change and develop as you kind of go through those different phases of growth? And if you were to go back and start a company today, like what are some of the key things that you take away from those experiences that you might take to an early stage experience as well?
Sure. So happy to give my perspective here. In full disclosure, I've never had the courage to be a founder like the other panelists here, and I admire them for taking that leap. I was kind of the older gray-haired guy, and I'm not that old, but I was the guy who was brought in to help scale. And so I'll give you my perspective, but don't know what it feels like to be in their shoes, obviously. I think, having seen this several times going from small to big, my biggest takeaway was the maturation process can be very challenging, right? I'm sure, all of you on the panel here have gone through this. And Lee, when you were at Galvanize with 2 employees, it's a very different world when you have 2 employees in one room and then you scale up to 285 employees and multiple offices, perhaps international exposure. The complexity increases exponentially, right? And I found that functions get much more complex over time as well, right? Operations are fairly easy when there's 10 people in a warehouse. Before you know it, you're scaled to a point where you have, a global supply chain, and you have a nationwide distribution network. And so complexity breeds a bunch of things. I think what I see often is really regarding changes in personnel that can be kind of challenging, right? You go from a cohesive early team, and again, the panelists know better than I do, but what I've seen is you often have really smart general athletes that then need to step aside for folks who have industry expertise in certain areas, right? Especially as complexity grows. And this can all be very, I think, challenging. And I'd love to hear, the real deal, the founders' thoughts on this. But that's a hard process. And I think through it all, you're trying to maintain a culture. And what I've seen at Bonobos, Stitch Fix, elsewhere, is there's something magical about the early days, right? Everyone's mission driven. Everyone wants to take over the world. Even at Bonobos, right? You're selling pants, right? How do you change the world with pants? But Andy Dunn, our founder, got us so fired up to take over the world one pan at a time, right? That was the magic of the early days. And the question is, how do you scale that to multiple offices, lots of hierarchy? How do you keep that magic alive? And so as far as tips for you guys, I mean, the founders know it best, but what I saw and resonated most with me was what I saw Katrina Lake do at Stitch Fix. So she started that company right out of business school. And I think of the many things she did well, 2 stood out. And the first was she hired the right execs, right? And this is before my time, and it's much easier said than done, but she hired a blend of execs who had enough industry expertise to understand what the future looked like, especially as this complexity grows. But they were also had the right mix of flexibility and scrappiness to thrive in a chaotic startup environment, right? Because I've seen it go the other way, where you hire the big company guy, they come in, they're a stick in the mud, and they flail and can't operate in the gray, and end up flaming out. And so she hired flexible people, which I thought was important. And more importantly, actually, she was self-aware enough to know that she needed to hire people who complemented her, and then she was trusting enough to actually let them do their job. I think for a lot of founders I've seen, there's an urge to control, which I'm sure is incredibly intense, but she had the ability to let it go. And then the last thing I'll say is she was very, very thoughtful about the types of behaviors she wanted her employees to have as the company scaled, right? How do you maintain that culture, that magic I talked about? And for them, it was getting very specific about what they wanted to hire for, how they wanted to onboard in accordance with those values, how you reward people, how you fire people, how you talk about your values in a group setting, and really bake them into the DNA, because a founder can't be in every hiring decision, right? Eventually you're going to have someone beneath you and someone beneath them hiring people. And unless that culture is diffused throughout, I think things can spiral quickly. So anyway, that was my take on what I've seen in multiple iterations. And again, not being a founder, it's kind of an outsider's view, but that was the hardest part of scaling companies from my perspective.
Can I ask you just one kind of question off the back of that as well, John? You obviously, I believe, unless I'm mistaken, you were at Stitch Fix when you went through that IPO process and saw that process unfold. And it's definitely been really interesting just to see the year of the IPO this last year. I'm curious, obviously a lot of founders look at the IPO as the kind of holy grail of their accomplishment with their business. I'm curious, like how you saw that process unfold and what changed in the business as you kind of went through that experience.
Sure. I have to say, so it was definitely a landmark in my career. It's fun. You get to go to the NASDAQ and stand behind Katrina when she pushes the button. Like, it's definitely a fun moment. I think what you just mentioned, though, is it being a kind of a landmark moment. I think the challenge we had is to frame it not as a finish line, though. I think a lot of folks within companies, they think of that as the finish line. And you almost go through this emotional journey where you make it and then, okay, well, how do I keep people engaged through the next phase, right? It's just a financing at the end of the day. And so if you're building an enduring company, it's not a finish line. And so making that's clear to the employees can be tough because everyone's checking the stock ticker and totally distracted, honestly. The other thing I saw is, and it's a necessity of IPOing, right? You need to get more disciplined around financial controls. How do you protect information? How do you make sure, the right people have access to the right info so that you're not accidentally disclosing, information in ways you're not supposed to? And that means you do have to introduce a lot more rigor, right? We had PwC in the building for a year trying to get our financial controls in place, trying to segment users so that they didn't have access to what they shouldn't have access to. And it does change the company. It takes us on this journey. I like to, I used to read the Dilbert comics, if you're familiar with Dilbert. And I've tried to coin this phrase about Dilbertization. You take a fun-loving, scrappy startup and you start putting in checks, balances, TPS reports, all this stuff. And before you know it, it can be a pretty eye-rolling Dilberty type experience. And I don't think IPOs need to take you there, but it puts you on that path. So I think as founders, you just need to be aware of that because it places a pretty heavy administrative burden, which can make things a little less fun in my experience.
I think that is definitely the word for the day, Dilbertization. I've written that one down. Kristin, I'm going to throw it over to you here. So you've got a very complicated operations to your business. I know obviously, Lee, you do because you're dealing with furniture and big items, but Kristin, you have a dual kind of marketplace where you are accepting secondhand items, lightly used baby gears from your consumers, as well as obviously shipping items out. How have you found scaling up such operations, and what are some of the key kind of lessons and tools you've learned from that experience and that you've developed?
Sure, yeah. So we have thousands of SKUs. Everything is pretty much unique. So trying to find a off-the-shelf product didn't exist. Shopify, for those of you building e-commerce companies, I highly recommend. It's awesome for a front end. That's what we use as our front end. But in terms of the back end and how do we manage thousands of SKUs, that was something that didn't exist. And so we had to build it ourselves. And I'm very proud of how we scaled it in building out that technology. Is we did everything manually first. Basically did it until it was so painful that we couldn't do it manually anymore. But what that did for us is made sure what we were building was exactly what we needed, so that you, as a product person, you don't want to build stuff that no one's going to use. So making sure that you know exactly what you require. So we were very pragmatic about how we would automate those redundant steps. And so we've done a really great job of the inbound processing and being able to categorize and process every single item. So we have like a whole backend database where we have every single baby and kid gear product and every variation, year, and common issues and quality checks that is all built into a mobile app that anyone that comes in and works at a warehouse can use that and post it. But I will say that we are definitely at an inflection point where, to John's point, like we are actually hiring. So if anyone fits this scrappy but yet has the experience in logistics, we are hiring, because we're definitely at the inflection point where we need help in, especially in the outbound logistics side. That's not rocket science. I mean, people ship stuff out all the time, so we're really needing to improve our outbound logistics and hiring for that support right now. So yeah, I mean, it's complex, but I would say like logistics is not rocket science. It's not something that that if you're starting a business that you can't figure out, and there's also other solutions, if you're not doing something like we are, where you have unique SKUs for every single thing, that there's 3PLs and there's third-party services, and the Shopify developer community is incredible. So there's lots of resources out there to get you going if you don't do something as complex as we are.
Awesome, thanks for that. Jonathan, over to you. Yaguara, you mentioned obviously at the start of the call is all about taking data and enhancing decision-making from that for e-commerce companies so that they can act smarter. Can you talk us a little bit through, what Yaguara does and the role, specifically like the role of data in e-commerce and some of the key kind of pitfalls of early stage company around the use of data, and obviously recognizing that a lot of the people listening in might be founders and working at e-commerce companies and might benefit from some tips.
Yeah, I mean, I think it all kind of started from my background in kind of building decision support tools inside of hospital systems and seeing that like great data ultimately serves the end user and creates better outcomes. And so I think that that's always been a really specific point of view that we've had is that like data kind of without context is fairly useless. And so when we approach building like this next generation of kind of a connected operations platform to be informed by data, that the end goal of that wasn't just to like say we have this promise of big data that we're storing rows and rows and rows of data in one place, but ultimately that we could have data inside of context that then could inform end commercial users to make better decisions faster. And so I think to that end, like where we see a lot of companies make mistakes early on is that lack of context. And I think that can be true on two sides. One, staying too high level and not really understanding the complexities of data that an AOV on gross sales gives you a very different signal on your business than an AOV against net sales. Or on the other side of things, that people can go too granularly too quickly and care about attribution margin before they understand like the profitability of each unit or each purchase. And so I think for us, that's I think been a really exciting thing that we've been able to do with like this very prescriptive point of view, is to, as we're vertically focused on commerce as a whole, is to bring things to bear that are meaningful to each business based on stage, sector, type of products, and that like I think a great example is we work with an awful lot of furniture companies, and conversion rate for an apparel company can be a really brilliant leading indicator of the quality of traffic that you're sending. But for a $5,000 outdoor couch, it's probably going to be a 6 to 12 week lagging indicator based on consideration cycle. And so I think, on two sides, I think it's really important to understand what's the context of your business, what are the complexities of like your individual model, and then understanding what are kind of the lagging and leading indicators around that before kind of getting into that really granular level of data and trying to understand what might be the leading indicators of the business.
John, I might actually throw this one back to you, because I'm talking about data. I'm fascinated about the story of Stitch Fix there, and obviously Stitch Fix is famous for its mass data and algorithmic approach to driving personalization in the e-commerce experience and ultimately a better shopping experience. Can you talk through just that model and the role of AI and data and automation in that e-commerce experience at Stitch Fix and how you saw that into the future?
Certainly. And but first, though, I just wanted to mention what Jonathan just said resonated, which is I think no one's going to argue that harnessing data and having a data-driven business model is important. I think you can reach a point though where you're swimming in data, and if you're not careful about focusing on what matters, you can focus on the wrong things. And I've seen that as well. We can dive super deep on things that quite honestly are a waste of time, right? And so I think knowing what to measure and what's important is critical. I think it's funny, it's to transition to Stitch Fix, right? They're well known for using data and algorithms and AI to drive that model. I think AI is one of these funny words that I think is incredibly powerful in certain contexts for certain businesses. Quite frankly, it's a buzzword in others, and I don't know if it really has quite as much power as people pitch it as having. I think the beauty of AI at Stitch Fix, though, is that we were solving very complex problems with two sets of data that were inherently unstructured, right? The core of Stitch Fix is matching. right? At the very core, you have a consumer who just wants pants that fit and that makes them feel good about themselves, right? And on the other hand, you have this massive array of inventory, right? Clothing is incredibly diverse and complex. You've got silhouettes and cuts and colors and all sorts of stuff, all of which is incredibly unstructured. And so it's hard to put your arms around it unless you can somehow get that data to be structured and then use data science and algorithmic tools to help match them up. And so what we spent a lot of time on, honestly, is just getting good at classifying the characteristics on both sides of this equation, right? A woman will tell you she loves, you know, glamorous clothing, or she's preppy, but until you dive into where do you shop and what do you really like and how does that really fit, it's hard to get real good data from customers. And then on the flip side, clothing is notorious for being all over the place, right? A medium bonobo shirt is not the same as a medium J. Crew shirt. So we had to go through and actually measure all of our clothing. We would take 12 to 20 different points of measure for every shirt. So we get sleeve length and torso length and armpit, you know, aperture, all of this data so that we could have structured data to then match. And I think that was a lot of the legwork. And then what was important is we built a flywheel where customers would receive fixes from us and then actually volunteer feedback about what worked and didn't so that we can get better, right? I think a key to the Stitch Fix model is you actually built a model where customers believed that the feedback they gave us mattered, and so they gave it. Because unless you actually get that feedback from customers on a regular basis, it's hard to train a model and get better at predicting. And so I think it's going to have a powerful impact on retail, especially in some of the softer categories like the one Lee is in. You know, early on, it's pretty easy to do recommendations for movies and books. As you get into softer categories with more ambiguous characteristics, it gets harder. And I can see why in the future AI could help Lee match up someone who likes I'm not a furniture guy, so I'm gonna butcher this, but if you like a stickly chair, you're gonna love a Crate and Barrel lamp, right? And I think that's gonna be powerful.
Awesome. Lee, one of the selling points of Havenly is that you take care of the shopping for your customers as well, and you have relationships with, I believe, over 200 furniture sellers on the back end to facilitate those home furnishing sales. I'm curious, you kind of touched on this previously before as we're kind of talking about Wayfair and some of the changes which have been happening there, but how has COVID impacted things for you, and have you seen any major supply disruptions, and what actions have you taken to mitigate some of those impacts?
Yeah, I think one of the hardest things that we sometimes do as a business is we have a dropship model, which ultimately means we're not responsible for fulfilling the product purchase to the customer. So someone else owns that component of things, which in many ways is awesome for us. So unlike a Stitch Fix, we never have to buy inventory or go long on inventory on anything. And so it's really working capital efficient. But what it does mean though is there's a brand overhang where, one of the things that you should know about furniture is it's big and bulky and expensive to ship. And even retailers who are actually pretty good at this get it wrong a lot. And so we have like an unforced error rate that is pretty unbelievable. And the reality is it's just like the nature of the furniture game. But I definitely think like one of the things that's been interesting about the business is like that impacts Havenly's brand. So if Wayfair delivers something broken to you, because you ultimately got the recommendation and purchased it through us, it feels like Havenly did something wrong. So we've been really sensitive to this. And it's actually been a tough problem and a really stubborn problem for us to figure out how to either separate the two or get better at sort of helping our retail or wholesale partners fulfill product to our customers. That being said, so as you can imagine, sometime in February, what happened was, particularly a lot of the lower priced vendors that we work with, so that's, even Wayfair, they saw a real struggle because when you think about it, all of Asia was sort of closed down. And so as a result, what happened was in March, things weren't getting fulfilled. And that was really interesting. It was tougher than I would have expected in the sense that, that you didn't you didn't exactly know when it was going. It wasn't like we could tell our customers, hey, it's Chinese New Year, and so for a week or two things are going to be delayed, but it'll be fine. There was this unknown quality to this, and then it kind of dovetailed into the US shutting down in mid-March. And so as a result, we had a decent amount of unhappiness, I think, with our end customer base in February, because the US, if you remember, didn't fully understand that COVID was like a really serious thing until about March. So in that period, there was sort of this delay. You didn't exactly know what was going to happen. You didn't know when it was going to open up. And then we were slammed with, oh my gosh, we have to shut down our office and the world is falling apart here in the US as well. And so it was a really interesting sort of anecdote. But I do think in all fairness, I'd say by the time we shut down in mid-March, anyone that was sourcing out of China was, and most factories or most vendors that were relying on factories in China were back up to nearly 100%. It was surprisingly efficient how Asian manufacturers came back online. And they clearly have, in many cases, done pretty well at maintaining operations over the last few months. So it was a short-term thing. The one thing I will also mention, which I thought was kind of interesting, is customers. So the thing that actually ended up being a longer term problem that's still a problem right now is online demand for home furnishings, or even offline demand for home furnishings, is dramatically higher than what we'd expected. And so nearly all of our vendors, even the ones that don't manufacture in China or don't have manufacturing issues per se, including ourselves, have been dealing with longer wait times just because we're consistently out kicking what we thought our supply needed to be. So as an example, we're running like a 4,000 person, 3,600 person wait list right now just to get a designer at Havenly. And that's not a fun problem as a CEO to talk about. I mean, it's a better problem than the other way around, I suppose, but it is a problem. And that goes all the way back down to our vendors, where our most popular items are typically back ordered by months, because we didn't, no one really, I didn't come in certainly expecting a little pandemic that would require everyone to stay at home and thus upgrade their home. This was unpredictable for a lot of us. And so for a lot of this year, the story has been, for us, capacity and supply. Which has been interesting and a challenge. And by the way, an incredibly frustrating challenge as the CEO of the company, because you see the dollars that you could have made and all you're thinking is, man, if I had only, if I had only. And then, so, it's been a challenge, but it's across the home industry. And everyone you talk to is sort of dealing with this like unexpected demand spike over the summer.
Yeah, I'm definitely experiencing that myself. I'm still waiting for my Home Depot sprinkler set to arrive after 3 months. But Kristin, I'm going to flick this to you. I'd love to kind of get your perspective on this, and specifically, obviously, you're operating in a market where it's usually more secondhand or lightly used, more discounted merchandise. And I think I'd love to kind of get your perspectives on how consumer sentiment in the market has maybe been shifting with COVID around that. And there's been a lot of chatter about, maybe a shift towards more secondhand and discounted good, given the unemployment rates and other concerns. Could you walk us through, what you've seen through this?
Yeah, absolutely. And I will say that, the beginning of March, we didn't know. I mean, like Lee said, there's so much uncertainty. And honestly, if you remember back then, like, we didn't know how, I guess we don't know exactly how COVID is spread, but it was really about surfaces. And so we were like, well, who's going to buy secondhand when this is how, COVID's going to spread? So that was our worry. And then we didn't know if we could stay operational. And so there was a ton of uncertainty, and we went on the complete defense. Our business was doing really well. We were actually had our pitch deck, and we were about to go start fundraising that week. And we put that all on hold. We actually, we cut our OpEx by 40%. We let some people go. And then, we kind of waited for a couple of days, and the demand did not slow down. And we just found that, our value prop only became more elevated. And just as you were saying, Tom, people, still need to buy secondhand. And honestly, it became a more trusted way to buy secondhand, rather than trying to meet somebody in a parking lot and buying it on Craigslist or Facebook Marketplace. So you just click and buy it online. And to Lee's point, people, it's a relatively new thing to buy secondhand online. And, a lot of people think you have to go to a thrift store. And so getting over that hump of being able to buy these things online is, that's been a great tailwind that we've been able to capitalize on. And so our business has has been going very well. I mean, also during COVID, we didn't, because we let everyone go. It was just my co-founder and I here in the warehouse, like processing inventory and packing boxes. And so it's been a wild ride, but we have the most amazing team and everybody really stepped up. And so now we're hiring. So anybody who's looking for a job, we probably have something for you.
Awesome. Just a reminder to everyone on the call that we will be addressing all the questions you're firing through just in the last 15, 20 minutes or so. There's I can see some really awesome questions coming through there. Jonathan, you recently had a fundraising $7.2 million seed round, which you raised from venture capital and a lot of angels. I'm wondering, we've got a lot of founders on the call. Like, can you share some of the experiences you went through that fundraising process and any advice around some of the thinking you went through around that fundraising process?
Yeah, I mean, I'm sure Lee and Kristin would feel the same way. I don't know if I'm allowed to curse on this. Regardless of how well it goes, like raising money is always really fucking hard. And like the first time we raised money, it took us a year to raise like our first $1 million. And then that round more recently, we closed in about 30 days. And those come with very different hardships with them. And I think the biggest thing is really like, we from the beginning had these like secular beliefs in the future of commerce and the future of work, and that it was right for us to build like a full platform play around that. And when you're getting off the ground, that feels like biting off an awful lot. And so I think it's like, one, finding the people that believe the things you do, which is really exhausting, and you're going to get told no tons and tons and tons of times. But when you find the people who do, those people can really make not just like incremental differences, but really large, meaningful differences. And we are fortunate to find some of those people in people like Henry Davis and Brian Mahoney, who are the COO and CTO of Glossy. And that led to us being introduced to people like Neil and Dave and Joey, founders of Warby Parker and Allbirds. And so I think like those are people, I didn't have any of those connections. And those types of things happen when you find people who like really at the core of them believe the same things you do. And so I think like where I would encourage any founders who are thinking about raising capital is like, it's going to be hard, and know it's going to be really hard. My advice is always don't start a company unless you can't not start it. And take your time finding the people who really believe the things that you do. Because when you find those people, it's worth getting through the 170 some odd no's that you'll probably end up going through to get that first check, to find those people who will come on and really be aligned with you and be willing to get into the trenches with you. This analogy gets used too often, but it really is a very serious, marriage-like relationship, especially when you think about bringing people onto your board. These are people that, potentially one day can fire you. So take your time finding the right people, even though it's painful.
Awesome, thanks for sharing that. I'm going to just ask a little, I'm going to start pivoting into more questions about the future. We do have some questions about practical tips for founders that we'll get to as well. I'm going to open this question up a little bit more. So if anyone can answer this, Lee, I'd love to get your views as well. But there's a lot of new tech coming down the pipe. This was actually a question which we just got in the Q&A too, which is like what is the new tech coming down the pipe that you think will significantly shape how e-commerce is done in the future? And I'm specifically interested in touching on things like maybe AR and VR, virtual reality, mobile. The question in the Q&A was around blockchain and AI. So is there anything specifically that you guys are keeping a really close eye on, or that you see as being a really big thing which will be affecting your business moving forward?
Yeah, it's so interesting. Like, I think one of the things that's been slightly different, well, maybe not slightly different, but my perspective on technology, particularly in the consumer space, is sometimes there's a tendency to take the tech and try and find a problem it solves, as opposed to looking at the problems that your customers have and trying to understand if there's technology that can solve it. And I think that's been actually something that we've struggled with a little bit, to be perfectly honest, where you hear about things and you're like, oh yeah, AI, that sounds cool, or VR, let's like, and like it turns out our customers are women, oftentimes, early middle-aged, like myself, to middle-aged. And by the way, they're not often always the most tech savvy, although they certainly do have a digital bent. And like the idea that they'd put on a headset and like view their room is like just not realistic. Like, and I always find it kind of funny because whenever I fundraise, I remember my first, speaking of fundraising, Jonathan, my first fundraise conversation, drones were a thing. Like drone technology, in 2015 was something that like VCs were super excited about. And this guy is this junior VC, I don't know, VC analyst, whatever you call him, baby VC. He was like sitting there talking about how we could use drones to deliver items. And I was like, do you know how much a couch weighs? Like, what is that? It was just like a very strange and extreme example of how you can potentially take what is ultimately in specific narrow settings a very interesting technology, and it may not actually translate to what we do. Now, here's what I will say. Beyond the gaming world, e-commerce has typically been the first adopter of a lot of technology. So whether that is mobile or that is AI or machine learning, as John was talking about at Stitch Fix, I think it's actually like a really compelling way to think about expanding a technology beyond a very small subset of users into more of the mass adoption categories. And I think in particular, where we think about it is we do and we have done quite a bit of work on some of the data components. And again, similar to what John was talking about at Stitch Fix, a little different, but similar, trying to understand people's preferences and how that matches up with both designers and the products we suggest to them. The second thing that is probably very obvious is really the AR world. And that is, and that is really like this idea that in the home category, where there's a really sort of spatial element to what we're selling, being able to allow people to visualize what their room or their home may look like with the stuff that we're suggesting is actually a really compelling thing. And for a really long time, by the way, that technology wasn't there. Now it is. And so it's something that we're investing in pretty significantly. But that's a really exciting way to think about the problem that the user has is, I can't picture this couch in my space. I literally, as a user, I have no understanding of how this might flow, how it might look, whether it would fit. And so, the real answer there is we've got some really interesting visualization technologies that are available and actually relatively inexpensive now that we can bring to them to allow them to sort of see it. And what's funny is it's not just a utility. What we found is the way 3D works now is it actually creates this like super magical experience where you can imagine, you can take your like ugly, dated, boring home and you can really start to dream about what it could be. So it allows you to sort of see the possibilities, and it has this aspirational quality that I really love that brings a lot of magic to what we do in our business. But there's a lot out there. We're doing a lot of mobile, sort of the obvious answer. I think for anyone in e-commerce, our category, by the way, has less mobile penetration than others, but it's kind of like, obviously, we'll be investing on the mobile side. But again, I think like blockchain, we're still probably a bit further away from that. Like, there's no real problem yet that I can see from a mass consumer perspective that's really solving. But it does solve some things in other categories, just like where we play, that's still not quite there.
Awesome. All right, I'm gonna just quickly ask one last question, and then I might flick it over to Luis, who's going to run through the audience questions we've received, and I can always come back if we have time at the end. I'm going to flick this question to Kristin, actually. One thing which has been on my mind it's been very interesting just to see from an operational perspective how things have developed over recent years. We kind of went from 2-day shipping with Amazon to next day shipping to same day shipping to live tracking and free returns, and I feel like the standards of operations that you have to build as an e-commerce company today are just getting up, increased and increased. You obviously build up your operations and logistics to date, and I'm just kind of curious, where do you see, this going, and where do you see operations 5 years from now, and what does it take to kind of really play in this market with those standards being set?
Yeah, that's a great question. And I would say, Amazon is the behemoth, and I think that any small e-commerce company trying to compete with them on speed and cost, you're probably going to fail, unless you're very well funded. And I think that the average distance from Amazon to the average consumer is 50 miles, whereas most e-commerce companies, it's 1,000 miles. So just in the number of miles of where your distribution centers is, it's very hard to compete on speed and cost. But I think one of the things that, the way that we look at it is that, today's consumers are making different decisions about purchasing, and it's not just about speed and cost, it's about the brand and do they care about sustainability, for example, and how do they treat their customers? And so, customers are really making more intentional product purchasing decisions. And so, I mean, we've seen, for example, like we charge for shipping. People pay shipping. Our shipping is sometimes 8 days, but as long as you have the basics of being able to communicate with the customer that they know where it is, they don't think it's a fraud or like they've been scammed. And so you have like the basic tracking and that customers have the right expectations. That I think, I mean, that's the way we're thinking about it. Obviously, we want to provide the best in class, but we're not going to have same day delivery for a unique secondhand item that is in, Denver that someone in Florida wants. I mean, that's not going to happen. And so we just set the expectations there and then do the best to give the customers excellent experience. I mean, we send handwritten notes for the first order. On the 10th order, we send a cute kid's book. Like we do little things to try to have a really great experience. And then, it's a unique experience because you sell things back with us. I mean, when your child's done with it 3 months later, or they've used it twice, you can sell it back and recoup most of your cost from it. So, so Amazon, I think, is great for, I use Amazon a lot, but I don't use Amazon to buy furniture. I don't use Amazon to buy my makeup. And, I use Sephora because Sephora knows the stuff I usually buy and when I need the next stuff, and then recommends the things that they think I would like based on my previous purchases. And I think that comes back to what, both John and Lee have talked about, which is the personalization and having that really good data to know what all the products, like what are all those characteristics that matter about the product and what do people care about and how do you match that? And so like the future of e-commerce, I believe, is not going to be what it is today, which is like search and filter. And you have 10,000 items, you can find anything you can possibly want on Amazon and get it tomorrow. But instead, you're going to be like, it's more curated here based on everything you've told us about yourself and your family or whatever it is that you're buying. Like, here are the items that you need, just like what Lee's doing for furniture and Stitch Fix. I use Stitch Fix, I use Havenly. I mean, these are modern products that people are going to use and don't have time to be searching and filtering, even if they get it tomorrow. If it's the wrong thing, it's a waste of time. So long-winded way to say, I think the future is not to compete with Amazon, but to provide a better experience.
I love that. I love that. Don't compete on cost and don't compete on speed of delivery, but compete on personalization and the experience. That's awesome. Well, what a great way to leave. Luis, I'm going to flick it over to you. If you could level up some of the questions we've got from the audience.
Sounds good. And thank you everyone for asking questions. They were amazing and we will try to answer as many as we can. So some of the questions revolved around practical tips for founders, especially for early stage startups. And so I'm going to direct the question to the group. You've all been super successful. Well, I would like to start with John, actually, to get the ball rolling. A question that people have is how can you drive traffic to your site? How can you help? How do you grow your brand and your products? How do you encourage existing customers to recommend your brand? So basically, how do you grow your business when you're early? How do you drive traffic?
Oh wow! Okay, that's a hard one. I don't know. I should probably bounce past that to a founder.
Growth hacking tips. Growth hacking tips.
I mean, I'm happy to tell you. So it's a piggyback off what Kristin said. I mean, at Bonobos, we were trying to, first of all, develop a product people wanted, right? So you need pants that are actually high quality and fit. But then it was about providing people with an amazing experience. Like, we way over-indexed in customer service. We were losing tons of money just trying to delight people with our customer service because we had to build credibility with them about pants that they've never heard of. So for us, it was a lot about building trust, building word of mouth by not only providing a great product, but then backing it with a level of service that you just couldn't find elsewhere. And so that was the magic that really got the flywheel going for the word of mouth that Bonobos enjoyed. But I'll kick it over to a founder who's actually been there, done that.
One of my favorite things that my friend Henry, who is the COO at Glossier for a long time, said is, you have product market fit when your customers behave irrationally. And I think that like varies by the company. But in terms of like pulling growth levers, if your customers don't love your product, pulling those growth levers is going to be incredibly hard. And so I think like finding what are those irrational behaviors and doing things that, whether it's writing notes and putting them in a box, or spending an awful lot of money on product, or spending an awful lot of money on customer experience, finding ways to, what are the ways that you can help your customers behave irrationally, fall in love with your brand, fall in love with an experience of like acquiring products in a different way, like Havenly does. That has to come before the growth levers can be pulled.
Yeah, I kind of hate to say this. I mean, I think the one thing I would say is like, so often in these raise big, raise a lot, run at a loss times, I feel like founders lose this idea of just the magic of the experience. And by the way, like it gets me in a lot of trouble internally sometimes because I like press so hard on like creating a magical customer experience. Like it is something that I think I'm the stakeholder for. And oftentimes it means either spending a lot of money or, having a team do a lot of like, sort of manual or hard things. But the reality is like we are not the company that was able to raise like, $50 million in year one. Similar to Jonathan, I had like a really, really tough time fundraising. I still do. And so what it means is like every dollar for us counts. And the reality is it's a lot less expensive to have someone have a really, really great experience with your product, like a really magical one, a magical enough one where tonight, back in the day when we used to go out to drinks or dinner, you would then tell the friend that you were going out to drinks or dinner with about your experience. That is worth, the cost of acquiring that customer without having that reference point would have been a lot higher. And so I think for us, that idea of like the magical experience, whatever it means, and finding that too, one of the things I've noticed with a lot of founders, CEOs is they kind of understand what the happy path is. So they have this understanding of this is a magical experience with the customer when X happens, and then orienting all of their operations. This is really critical. Like, don't let the tail wag the dog is sort of my favorite saying. It's like, don't let the fact that it's hard stop you from delivering a really magical experience. Like, find that out. And this is something I think Bonobos actually did really well back in the day, was like, the guys would wear pants and the pants were like amazing. And then they could return the pants whenever. And it was one of those things where it was like, that has to be hard. Like that does have to be expensive looking in from the outside. But Bonobos, the brand grew. I mean, my entire business school class wore Bonobos for like at least 2009 to 2011. Right. And so I do think there's this component of magic and you just have to figure out what that is. In pants, it's probably customer service. For us, it's a lot of other things. But it is important to kind of remember that and hold on to that, by the way, as you grow, because you're going to have strong operations and tech leaders being like, this doesn't make sense or this is hard. You just got to hold that North Star for as a founder.
Thank you. Oh, sorry, Kristin.
Oh, I was going to add one tidbit because I think, when you're getting the ball rolling, like really getting started, I think that it's really important to have those, amazing experiences, and you can do that. But if you're not solving a problem that people have, like that's sort of the step one. And I can tell you from our experience, we started the company to solve our own personal pain point, but we thought we could do it with technology and solve most of it by providing this app that people could take a photo, we would do all the rest. And we were, getting a little bit of traction and, some people, but we just did not have enough inventory and enough people doing it. And so, we were doing all the work, pickups and stuff ourselves. And my co-founder, Jess, was at someone's house and she was like, had sold a few things. And she was like, oh, I have like a basement full, I'll get to it. And Jess just said, well, I can just take it now and take the photos for you. And she was like, oh my God, are you serious? Okay. And like loaded up her van. And then she told her neighbor, who told her neighbor. And then like, we didn't have it on our website that we were doing this white glove service and we had 20 of them. And so I think like things like that, where you really delight and solve a customer's true pain point, I think is step one. And then once you've done that, then you have to make sure it is a really amazing experience, because we're all very fickle customers. If you have a bad experience, you're done. If you have a great experience, you're going to talk about it at dinner. And especially like most of our customers are moms, and the mom network is so powerful. And so if you screw up, you're in trouble. So if you're great, everybody wants to tell each other about their great tips. So I think like step one, make sure you're solving a real problem, and then delight the customer. Step two.
Thank you, everyone. Very insightful. Maybe just to pivot off that, a lot of people are talking about how hard it is to get customers through paid social today, with Facebook getting more competitive every time and customer acquisition costs increasing. So is there anything that you have seen or learned in marketing so far?
Have I seen or learned anything in marketing so far?
No, I mean about no.
Yeah, I think so. But no, Luis, it's a good point though. I think like the one thing that I will say is like what I think is really fascinating about paid marketing. By the way, Havenly is a company that fell into this trap at times as well. Is like the thing is, it's almost always universally easier to just spend the extra dollar on Facebook and Instagram than like really retool your product to make sure that either it's solving a need or it's delightful for the customer. And so universally, we take the path of least resistance and we say something like, no, let me just take $100,000 or $500,000 or $1 million this month, and I'm going to pour it into this scalable thing. Because it feels like it scales and it feels like it's easy. And it's, by the way, it's measurable. And so us as humans tend to do what's measurable. And so we kind of say, okay, well, if I take that $1 million, I'll be able to get however many customers over here. And then you don't do the hard stuff. And the hard stuff is, how do I, those customers that I'm getting in with that $1 million or that $100,000 or $10,000, am I servicing them profitably, first of all? So like it gets real unprofitable real fast. And we have some scars to prove that. And then also, am I serving them in a way that makes it so that that customer, again, brings in 6 others or 10 others or whatever the ratio is that makes up that equation profitable. And way too often we end up doing these things. And that's what ended up happening, right? Like if you think about 2015, all the way from 2015 to 2020 even, what would happen is consumer companies would get funded. We'd all have like the same consumer in mind. We'd have like a slightly more digitally native, older millennial customer that makes $150,000 or more as our target customer. So this particular customer would get targeted across these platforms by all of these companies, all funded by the venture capital sector, and we're all comfortable running at a loss. And so what you saw is like this direct correlation between like venture funds for consumer companies and Facebook CPMs. And in fact, I can't remember, my favorite was the New York City subway. If any of you guys lived in New York, there was this whole thing where like there was a direct wealth transfer from Lear all to like out front who would do the subway ads, and like everyone would take over the subway. It was this crazy thing, but it's the same whole idea. And it's this idea that like, you get to run at a loss. And as a result, we get to we do these things that sometimes don't make sense in the short term from a profitability standpoint. So biggest learning is make sure that the incremental dollar that you are putting into your Facebook or your Instagram accounts still makes sense. That marginal dollar is what kills you, because where your first dollar may make sense, that marginal one, I guarantee you does not. And so instead of doing that, think about where else, it might be harder and it might be longer term, but where else you can put that dollar, whether it's in your tech or your product or your customer service, to ultimately get the delight factor that grows your business in a more organic way and sustainable way, frankly. And then, Facebook and Instagram should be the thing you do last, ultimately, when you figured out that formula. Real truth.
Awesome. Well, that's wonderful. Have we come up on time, Michael? I think this was a 60-minute. Was that right? Have I got that correct? I have. Okay, great. Well, we've come up on the hour. We had so many more questions that we could ask and wanted to get towards. If anybody on the call would like to follow up with any of the panelists or follow up with other questions, I'm happy to kind of be a conduit for that. You can find me on Twitter at Tom Hums, or you can find me on LinkedIn and maybe use that as a platform to connect, and I'll try to field all those questions and try to get answers from the panelists for you that way. Awesome. Thank you so much, everyone. I really appreciate it. Thanks to our panelists. Thanks, Luis and Elise. And thanks, Michael, for helping to coordinate. It's been a great conversation. Thank you.
Thanks, Tom.
Thank you.
Bye.
Thanks, everyone.
See you later, everyone.
Bye, everyone.